This is Tom Aspray with a Viper Report Market Wrap video for the week ending June 27th. It's part of a Technical Edge video series. And if you have any questions or comments on this video, you can always reach me at tom@viperreport.com. From the market perspective, last week the key news was the new highs in most of the major averages. You can see this chart, a monthly chart. Of course, that's what, based on the AD analysis was used for the major trend. It's IRAs, etc. It shows a major breakout of the AD line here. At the start of 24, and also with the stocks only as well as the NYSE all, and they're still both really strong. New highs here, not quite new highs in the stocks only, but you can see the NYSE Composite, that's a broad market average. It was up 2.8% for the week. The yearly pivot here is at 20,798 and then 22,500. That could be hit before the end of the year. If you look at the weekly data, you can see it's also broken out above this trend line resistance A. S&P AD line, has been leading the way along with the Qs. You can see it made a new high way back here. It's a weekly chart, so 6 weeks ago, and it made another new high last week. Volume was strong. NYSE all, this includes not only the stocks in the NYSE Composite, but as well as the bond funds, ADRs, etc. It also has been very bullish since April. So how did we get here? It has been quite a year, and I know some of you, hopefully not all of you, were quite bearish on stocks by the time we got into March. This is an article I published on Forbes.com. If you want to see all of them, Forbes @ Tom Aspray. This was published on March 30th and made the argument why stocks could move higher in the second quarter. That was not a common opinion at that point. And, this is how the chart looked, of the SPY, S&P, at the end of March rather. You can see pretty ugly. Technically this was a failing rally. We had a doji here, a doji sell signal, and AD lines. We've been talking about the key resistance levels, and we need to have them broken, before we start getting long. By the time we got into April, sentiment was also reaching a very extreme level. You can see the AD line broke out through its major resistance, going back to the early December highs. We've been pretty cautious since this area in here, based on a number of technical factors. The NYSE all broke its downtrend, and you get the stage thing that we teach in the AD course. First of all, you get a move back above the moving average. Then if there's a short-term downtrend like this red line, that's the second. So initially long, getting longer, getting much longer here, and that's where we still are. We can see that the AD line continues to make new highs on a daily basis, well above its rising moving average. So we would expect to see, before you see a big correction, a decisive break below that moving average, and the moving average is now rising nicely, so it's probably going to flatten out. The fact that the AD lines had made new highs, it's a leading indicator, though if you ask probably 6-8 strategists, you probably get 12 different opinions on that. I think I'm the only one that teaches about the advanced decline line. Happened in early 2019, also after the end of 2018, which was really an ugly market decline, and so it was projecting new highs for both the SPY and the QQQ. And way back then we were, the S&P was at 56.55. The Nasdaq 100 was at 20,061. So you can see at that chart, we pointed to the extremely low bull bear sentiment and the decisive new high, in the S&P advanced decline line. Going forward, I think the outlook is really good. I expect to see the market strong for the rest of the year. This interesting table from Ryan Dietrich, who does some really nice technical work from Carson Investment Research, shows that after you 2-month gains of 20% or more, that's what we had in the last 2 months. This is what happened for the last 50 years. You can see 3 months out, average was 12.5. 6 months out, average was 16.3. And 12 months out, the average was 30.8. Now he's not quite that bullish about the 30.8, and I don't look that far ahead. But this is statistically what happened, and you can see these different times when this did occur, and that's one of the many sort of statistical measures that points to much higher prices for the rest of the year. I see no signs yet that the leadership of the growth stocks is going to end. You can see here we have the weekly chart, convincing new high. Its AD line, made a new high, in in November or December, also in February, continues to surge higher. So 572 in the Qs, and then I guess this one is at 626. So if we get up to 572, we're not that far away at this point, really only 24 points. I'll probably take some profits off, but I see no short-term weakness. You can see the main reason that we like that, or one of them, is the RS. It's turned positive back in April as the market was bottoming, and that's why we really have been in the Qs as well as some of the leverage products. If you look at the daily chart, it also looks, had a kind of almost a doji on Friday, but you can see on a short-term basis, the monthly R2 resistance is at 556. That could be hitting 20 minutes on Monday, and the AD line is lagging a little bit. It's not made another new high about this high, but I'm not really worried about that. We have this good support here. I mean, I would get first things that would turn me nervous as I teach my students would be a drop back below this moving average, particularly if the moving average was no longer rising. Then you have to take out this low and this support, and then you're typically going to get a bounce back towards the highs that'll be weaker, and that'll be the time to take some profits. So the RS, the daily, it was looking really positive. We showed this chart many times in the videos back then. We broke out right here, broke out again here. It's a market leader. So that's what I use to pick not only ETFs but stocks. Not much to worry about in the current technical. You can see the new high, low analysis. It's still gradually rising. We didn't get any big sell signals from the new lows. Right in here, we started to see the fact that they were dropping off sharply. That was positive, and also a gradual rise in the new highs. The lows last week were a good setup. We dropped right back to the 20-period EMA. See this nice steady decline. Even that helped the sentiment. We got some selling in here, but the selling was not really nearly what the buying had been prior to that. So fairly good rally. Before it's over, I'd expect to see a 60% day on the Qs. So far, we haven't seen it. I have not yet jumped on the small cap bandwagon. They're well overdue for a rally. You can see we got down to the lower Stark bands in April too. That was another sign that you should be a buyer, not a seller. And you can see the on-balance volume has improved sharply. We're about ready to close above the yearly pivot, which is a sign of a trend, a bullish trend. That's at 216.92. So a close above that, this coming Friday, that would be a good sign. I like also the S&P 600. Here we go. It's this core small cap. You can see it's lagging a little bit, but it also shows a fairly tight range. So, it's more of a swing trader investor sort of instrument, whereas IWM is more for short-term scalping. That's good if you're a quick option trader because it gets the big bangs, or the big drops, so they can work for you or against you. So the put call numbers are dropping pretty sharply. That's the only problem with that is that at some point they're going to get too low. You can see we had a nice bounce at the lows here. Put call was 1.20. Well, it wasn't as bad as it to match the price action. So it's getting down there. To have a bounce, which may reflect a short-term pullback. Certainly after the new highs, that would not be surprising in the next week or two, maybe before the 4th holiday. The VIX and VXN gave a slight bounce here. Had some people turn bearish. I was looking, as I mentioned, I think in the video, this peak here and that peak, so we didn't get above those when we dropped back below. So they're both in downtrends. Downtrends and volatility is bullish for the stock market. Uptrends and volatility, like we saw here in March, is negative. Let's look at some of the watch lists. So weekly DTS signals, we had negative ones in GLD, IAU, TBT, and VDC, as well as XLP. Positive in REMAX, EMB, which is a bond ETF, also in home construction and in lithium batteries, TLT, which is, and also no in XOP is still negative DTS, but positive weekly. So if we move down here, you can see that growth 80% bullish, doing better than the value. Overall 69.5, so that's a bullish number. You can see by a little graph here. In terms of what's turning, for the first time, the KBE and the KRE moved back above their quarterly pivots, the light green here. XLB, is materials. It did also. From the growth side, ITB finally gave a weekly buy signal, so I'm looking at that as well as XHB. And in terms of the leverage, still pretty long leverage. The TQQ, which is our favorite, was up again last week, making a new 52-week high, and it looks strong. Short ETFs are getting hammered. You can see 000, so too early to be buying them, in my opinion. For those of you not familiar with my services, this is a report we send out to subscribers to the ETF report. Gives you kind of a breakdown. This is the triple leveraged SPXL, which would give a nice buy signal at the start of the week and still positive. So it's a nice leveraged thing. This kind of gives you how many components of each of the sector ETFs are above, are positive based on the crude oil backed off a bit. Still liking 75% for communications, and the XLK dropped a little further than expected. We're watching closely. We have some positions in XLU at much lower levels, and in XLP, which is acting weaker, but it's keeps holding the 50 levels. So, and this is the grid, gives you the weekly DTS, 3-day DTS, as well as this week I ended in the quarterly and the monthly. So there were 3 that gave monthly positive signals: S&P, SPY, SMH, the TQQ. So big part of that is looking at this RS. So the favorites have been technology. So this green line is a fast moving average of the RS, and the blue is a slow. So you look for crossovers. You can see right back in here in April, we had a nice positive signal. Not been as clear as we've been bullish on communications since 2023, but the SRS has been a lot choppier. You can see right now it's about ready to move above its last high. Ones that are giving us some warnings here are the industrials, which had been very strong. They turned down, so we'll watch we have a position in the industrial ETF as well as the stocks. Consumer discretionary just got back in that, so it's got to prove itself. These are some of our holdings, and you can so it's convenient for our clients to look at those and say, okay, this is looking pretty good, XLY, you can see had a nice close despite that reading. This is part of the sector report. It's sent out to both ETF and Viper Hot Stocks. Gives you really the meat of in terms of stock advice. So you can see, typically when a market's bottoming, you start to get 1 hour, 4 hour DTS, and then if we get 3 DTS, that's usually a pretty good signal. So like GE, flip back to positive late in the week. The longer term are positive, just the DTS, isn't. So wouldn't be surprised to see that get a pop next week. If you look in the consumer discretionary, Starbucks, CMG, Amazon, all positive. Lots of negatives in here. You can see AZO, again, the auto parts, got slammed pretty good a week or so ago. They're trying to recover. Tesla, also mostly red there. So Costco in the consumer staples, there's been a battle here. So Walmart, given it's pretty sold out, so that might be something to keep an eye on. Mondelez, it's been negative, so it just flipped back to a daily positive. Healthcare, has been in the dumps for a good part of the year, so a lot of red still here. So once again, we'll be looking for some lining up of some 1 hour, 4 hours in DTS for making new recommendations. Wells Fargo had a new daily DTS. American Express also. And technology, Apple is given a daily DTS. Technically, it doesn't look like the correction is over, but it wouldn't take much on the upside to turn them positive. So we're watching that one closely. Communications, a bunch of red and a bunch of green. And then utilities, still not looking too great, 8.3%. In real estate at 50. Well, that's about all I have for today. If you want to learn more about the advanced decline analysis, several articles on the website. For example, new highs for the S&P. What's that mean? Also, if you want to subscribe to either of our services, the Viper ETF or the Hot Stocks Report, typically get 2 multi-page reports twice a week, plus updates when the market moves either up or down. And we also, of course, do mentoring. So, mainly our ED course. As I said, I think it's the only one on the market right now. Have a good week trading. If you have any questions or comments, Tom at ViperReport.com. Thank you.